without further ado, I would love to introduce our moderator for today's panel. So Charlie McQueen is our moderator today. He is the president of McQueen Financial Advisors, m-f-a.com. Go ahead and look it up and check him out. He founded that company in 1999. McQueen Financial focuses on providing financial institutions with specialized investment and consulting services for long-term success. He oversees McQueen Financial Advisors' core services of investment portfolio management, asset liability management, mortgage servicing, rights valuations, merger valuations, and tactical consultation. Charlie regularly presents on topics such as CECL, profitability, liquidity planning, investment management, and asset liability management. He also provides clients with strategic consulting services, which include board of directors education, management team challenges, and long-term financial success. So, Charlie, I'm going to hand it over to you to go ahead and kickstart our panel. So thank you so much for joining us.
You're welcome. Thank you very much. And we'll have to get a much shorter bio. That's way too long. So I appreciate your reading there, but I almost fell asleep. So no, thank you. Actually, I'd love to do here is kick off, and I'm going to go in the order on the bottom of my screen here. I'd love to have the people speaking with me introduce themselves. So, Ben, we could start with you, just a little background introduction on who you are and how you ended up here. I appreciate that. And then we'll move to Jen and then Lori.
Great. Absolutely. Thanks, Charlie. Ben Maxim, VP of Digital Strategy and Innovation at MSU Federal Credit Union. I lead our FinTech and emerging technology exploration efforts through the lab at MSU-FCU. One of our first partners in that venture was Pocket Nest, and Jessica and I met with each other right before the pandemic started, and had an opportunity to have a coffee with her, and we knew we were onto something great for a partnership, and really enjoyed seeing how Pocket Nest has grown since we met February of 2020.
So actually meet in person with someone. That's amazing, Ben. That's
such
exactly
a
foreign concept these days.
Absolutely. I think that was the last in-person meeting I had with someone.
Yeah.
Thank you very much, Ben. I appreciate that. All right, Jen?
Hi, I'm Jennifer Hearn, and I'm from Community Choice Credit Union. I'm the Vice President of E-commerce. The debit card platform, payments, and the digital strategy are my goals. I've met Jessica and Chris. We've talked previously about some integration efforts, and so I was invited today, and I'm happy to be here. So thanks for inviting me.
Thank you, Jen, for being here. Appreciate having you here. All right, Lori?
Great. Well, good morning, everybody, or I should say good afternoon. My name's Lori. I'm the founder of WIM. We are a full-service technology partner and innovation lab for businesses. And our focus is really helping organizations implement new online or digital solutions that really deliver exceptional customer experiences and enable the employees to help be a part of that and serve them in the best capabilities. So we work with organizations that really focus on delivering high quality online experiences for more of our younger generation of customers who value their time and have a lot of options if they're not receiving the quality of service that they expect. So that's our background. We are at www.wearewim.com, and I met Jessica because we are a part of the ecosystem here of founders in Detroit, and we've known each other for a number of years.
Oh, thank you, Lori. Appreciate that. And I will say, though, as I joke with some of the younger people in my office about all sorts of different things, I think the older I get, the more concerned about time I am versus younger. So I might want to change that thought. But, that's a great point, and thank you. All right, well, I left the best for last year. Jessica, I'm sure everyone here knows you, but if you could just give a little introduction about how wonderful you are.
Oh, Charlie, that is so kind. So I'm Jessica Willis. I'm the founder and CEO at Pocket Nest. We do comprehensive financial planning. We license our software to credit unions so that they can identify non-interest income opportunities while providing a really great financial wellness tool to their members. I've known Charlie for, we've actually known each other for decades, but most recently, the last 3 or 4 years, And then, as Jen and Ben had mentioned, we've aligned with the two of them over potentially or currently rolling out Pocket Nest with their audiences. And what's been really, really fun in setting up this webinar is I have gotten to see how Ben and his team have been talking about really embracing digital strategy and what they need to be doing from an innovation standpoint. And then I've also had the same conversations with Jen and her team. And so that's why we really wanted, these two organizations and these two individuals to be on this. Lori, as she said, I've known her for a while. Although Lori is relatively new to the finance sector, you can look at the list of clients she's already served. She knows about digital transformation and digital strategy, really on the corporate side. So Lori and I have had some conversations most recently about marrying our two worlds together. So anyway, happy to be here. Happy to kick it off.
Cool. Thank you, Jess. Appreciate that. And a great way to tie it all in here. It's we're all moving forward for common good. And one of those common goods for me that makes me really enjoy Pocket Nest is the financial well-being and teaching people how to become more intelligent financially early in life, especially going back to Lori's comment about younger generations. I think that's one of the best things that Pocket Nest is providing. Along with that, it's providing a lot of other things. And so what I'd like to do now is go through some questions with our panelists and see if I can put them on the spot and trick them a little bit. It's always my favorite thing to do. And I hate to start with this. I gave a presentation the other day, and I started out with the coronavirus update just because our industry is so greatly affected by it. I don't think anyone ever thought that we'd have 30% plus deposit growth in about 5 quarters ever. And that's a reality of what's happened to our industry. Wow. So amazing deposit growth. And as we think about this, what I'd like to do is just talk a little bit about the effects of the pandemic. And I was going to start out with Lori. How did the pandemic affect digital innovation for the business community as a whole? But maybe focus more towards financial institutions. I know you work with other entities, which actually bringing some of that in, I think, is good, though. We need to be broader than our own forest sometimes.
Yeah, I think it's a great question. And in one of the articles that I read, Charlie, I think they said, welcome to 2030. So what that means is that COVID-19, or the coronavirus, really accelerated, basically by requirement, digital transformation for a lot of organizations. And that really is the virtual world. So when everything was shut down and services, in-person or physical services, weren't available, organizations really had to rapidly launch online solutions to help their customers continue to operate and stay in business. So I think for us, we spend a lot of time talking to CEOs, CFOs about the value of digital transformation in industries where they maybe aren't being as disrupted as others. And this helped move the business case along. So in a lot of cases prior to COVID, you'd have organizations saying, hey, listen, our sales look good. We have new customers joining. Yes, we know there's threats out in the marketplace with new startups coming on board, but we feel pretty confident that we can build a roadmap to transform at a pace that we kind of determine based on how much we want to invest. But that is all changed with COVID. So, and I think there's something interesting, and this is what Pocket Nest and Jess and Ashley and I were really looking at, which is, you have now technology adoption across all generations happening quite quickly. But as we look at what the future looks like, there was a couple things that really stuck out from the finance and banking side, which is 98% of millennials will fire their parents' institutions due to lack of technology or relationships. That came from a Goldman Sachs 2018, so that was pre-COVID. But that at the time, and this is coming from a Deloitte survey, only 29% of banks were actually accelerating their initiatives. So I'd be super curious to see the updated numbers. And I know that there's some great case studies that we're going to talk about here today. But I think that's a really interesting indication of what things were like before COVID, and then what COVID forced organizations to do rapidly to stay in business and stay connected to their customers or members.
Yeah, Lori, that's a great point. And it's funny. There was an adage we had talked about early in our office was 1 year of pandemic equals 10 years of life. And I thought it was just me mentally feeling, but I guess it's technology too. That is a very good point. If you think about this, a lot of us learned to become virtual companies in the matter of about 10 days, and others didn't. And it's the ones that did figure it out have survived quite well. So it's really, really good to see.
Yeah, no. And I mean, we were just talking about the member side, Charlie. I think if you also think back to a year where the small businesses were as far as PPP and CARES Act funding, banks' abilities to respond to the small businesses' needs for the government, funds that were available, those were key decision makers in whether you stayed or went or switched. So even just those type of activities were really unique to COVID-19.
Yeah, it's really interesting. Well, and so everyone's changing quickly, and so changing over to Ben for a second. From your perspective, or from the perspective of credit union, Ben, how did the pandemic expedite your needs for a better digital experience? What did you guys do, or what did you see you needed to do?
Yeah, absolutely. So pre-pandemic, digital was a huge focus for us, regardless. But there wasn't the traction that we were able to get once everyone quickly learned that we needed to be on board, or we weren't able to interact with our members in the way they needed us to. We have roughly 30% of our members live more than 30 miles from a branch. 14% live outside of the state of Michigan. We're a university-based credit union. A lot of people come to Michigan State University, then they spread out all over the world. And really being able to serve them in a way where they don't have the same access to a branch, down the street. We need to help them understand how they can interact with us in a positive way through digital and form the relationships that we're able to form with people who do come in and visit with us. We also had roughly 60 to 80,000, it fluctuates, members that are digital only, so they don't talk to us over the phone, they don't come into a branch. So we have 300,000 members total, just for some perspective. But we have a fair amount that don't interact with us any other way but digital. So it really became a focus for us pre-pandemic. But then 5 years worth of maybe even 10. But we've kind of been saying it's been 5 years of roadmap was accelerated into a year. We really doubled down our innovation efforts. I moved into my role overseeing innovation in January of 2020. Prior to that, I was leading our software development team and had been a developer prior to that. And we were doing some innovation, but it was kind of here or there, a lot more when we were smaller. But as we grew and scaled, we weren't able to do as much as we'd like. So moved over, and then we could have very easily, when COVID hit, said, all right, now's not the time to try this innovation thing, and instead a lot to do. So our now CEO who hired me to the credit union 14 years ago as VP e-commerce, with a focus on building out what we all call digital now and making a nimble unit to be responsive to our members' needs in a digital sense. So she had made a lot of traction along the way and over the years. But there, as we grew as an organization, there's a lot more focus. People were more in, well, we need to serve members in the branches this way, and we need to serve on the phone this way, and not really seeing it as the whole picture. And digital can be a threat to some of that. Really, when our branches closed, we were able to understand that this was the time to kind of double down on the innovation and really go. And we took our first innovation pilot with a company called Pop.io. They're a video banking solution out of Utah. And we wanted to be able to talk to our members face to face. We got that rolled out from signed contract to a first member call, member chat over the video, including training the employees that would do that within 5 weeks. That would have been a 10-month plus project for us pre-COVID and pre kind of this process. And that really kind of further solidified the buy-in to the success that innovation can bring. We also piloted a internal chatbot to help with some of the overwhelming now digital contacts to our call center and e-services team. So that was another one that was a huge success. We were able to figure out we could automate roughly 2,000 employee-to-employee interactions each month. Those were people who were putting members on hold to call into a helpline we had staffed internally. Now we're able to kind of redeploy people from that. So these are a couple quick wins. another theme that kind of fits back into Pocket Nest here was, people are going through financial hardships as well, right? So how do we provide and how do we end up being there for our members? Yes, we have some wealth management solutions. I know we have people who can advise at the credit union, but they don't really have a good way to do that at home. And Pocket Nest we saw as the way to do that and really help further relationship and kind of being that advisor and to help them through the tough times. The credit union was founded in 1937 out of the Great Depression, really with the mission to help people get in a better financial state, improve their financial wellness. Then this is how we're able to do it now, and it really is a great kind of tie back to kind of our core essential mission as a credit union.
And that's a lot. I'm just going to stop there. I mean,
Yep.
There's probably nothing left to do right now. There's obviously always more, but that's really, really impressive. A lot of things have taken place there. Thank you very much.
Absolutely.
Jen, wanted to just ask you a little bit. I mean, is this digital transformation, how has it been for you? I mean, how does it look in practice? What can you share a little bit about this for me?
Yeah, Charlie. So Community Choice, we launched a brand new digital platform in March of 2019. So our main goal is we wanted to have a consistent experience among our members, regardless of the device that they were on, and have the same features and functionalities across the board. So we spent the better part of 2019 and 2020 really building that platform out. Offering new things along the way, in increasing usage. So when we had launched our platform, we had about 50,000 users. And by the time COVID hit, we were over 70,000. So it proved to be successful in what we were offering to our members. And I think for us, we had a pretty favorable, platform. Members were giving us that feedback that they liked what they were seeing, they liked what we were offering. But when COVID hit, we really had to listen to them because we knew we were going to see an increase in usage and traffic. And one of their pain points was that we kept hearing over and over again is that we can't find things easily. We're having challenges. And so that really accelerated us. Like we wanted to do something, but COVID really pushed us in that direction. So we immediately did a refresh of our menu. We simplified things. We increased and improved our search functionality. That we just made it a main priority so that we knew as more and more they logged in, we just wanted it to be easier for them.
It's amazing to me, Jen, that it's what seems to be intuitive to my 6-year-old daughter is what you want. That she'll grab an iPad or an iPhone and navigate it better than I will because it just needs to be that intuitive. And looking in that direction is really smart. And you guys have incredible timing launching a new digital platform in March of 2019. I've got to give you all the credit for that. That's amazing. So Jessica, continuing this conversation a bit, how does FinTech play a role here in this digital strategy transformation? Because everyone looks at this differently too. I mean, thinking about Ben's answer and Jen's comments, very similar but also very different. And love to see how you feel about all that.
Yeah. I think if you're a financial institution like a credit union and you're talking about digital strategy, what you're talking about is FinTech, finance technology. So the thing that's been interesting to me as it relates to FinTech plus digital strategy at credit unions is for the longest time, we would hear questions around how does Pocket Nest fit in our digital strategy? And we struggled answering that question because what we learned was that digital strategy was defined differently it means a ton of different things to each person. And so what we heard was the question was sometimes, how does digital strategy, how are we combining antiquated software? Or, that might be one person's perspective of digital strategy. Another might be, how do we integrate all of our softwares to talk to one another? Another might be, how do we engage with people over technology? To us, it really means all of those things. And so as we talk about digital strategy for credit unions, and the way FinTech is involved in that, what we've learned is it's our responsibility. We're in a position to define what digital transformation and digital strategy should mean for credit unions. And so we're trying to have lots of conversations around what that is. That's part of why we're having this webinar here today, is to really get a better handle on what digital transformation and digital strategy for credit unions mean. And to us, it means bringing in great fintech, having all of your platforms talk to one another in a seamless way, and making sure those platforms, your vendors, are happy to work with other vendors as it relates to fintech.
Yeah, it's interesting. I always go back. The original thought to me of fintech was not having to type in information twice. And it's obviously grown substantially from there, but the same theories apply. It all has to work together seamlessly to the end user, the member of the credit union. So, okay, I'll ask Jen and Ben this next question, and I'll start with you, Jen. Were you able to reduce any expenses? Again, I'm the evil financial guy. I got to ask these questions, but were there expenses you were able to reduce by modifying your digital strategy, and such as number of people in branches, hours open, closed branches, any on that side of the equation from expense control?
Well, our main goal isn't necessarily to decrease expenses. We wanted to keep everybody employed first and foremost. So we were successful in not having to lay anybody off, which we were happy about. But when we limited hours, we really highlighted the appointment banking, which is inside of our digital platform, and just got creative with allowing members to really be able to do anything. Like, how do you ahead of time, get an instant issue debit, and, how do you plan and get to the member centers when there's limited access, but still get what you want. So I think just, focusing on the chat functionality as well, our overall call volume really increased. And so we just found ourselves, being just more creative and learning to say yes to everything that we possibly can because of the limited access to the member centers. So, I think it's hard to say that we really, decreased a huge amount of expenses, but I know we just were focused on the members and the team members and moved forward.
Thank you.
Yeah, and then to add to that, so really we kind of were unsure of where this was going to end up. So we did things like we did a hiring freeze for 2020, which really forced us to get creative. So we had plans to hire, 70, 80, 90 people last year that we didn't hire. So, everyone's plans had to be reconfigured, rethought. How can we figure out some things to be more efficient as a credit union? We're actually able to increase our efficiency overall to get us to kind of our target rate that we hadn't been able to achieve pre-pandemic. So, we found a lot of efficiencies along the way. We took this kind of whole company approach where we sent our BAs out to each area to identify individual kind of opportunities within each area. And we did things that were quick wins, high priority to do. And then as we start to figure out, where was the pandemic headed, we were able to start prioritizing things like appointment scheduling to be more efficient, when we were able to get people back into the branch. Things like the video chat solution I mentioned, that the pilot went well, so we scaled it and now made that a new service offering for our members. Beyond just pandemic times, we hope that gives more access to our financial services. People who may not be able to get to the branch on their own, maybe they rely on someone for transportation, they now have to wait. They had to wait for someone to be able to drive them to the branch to have some of these conversations that they can now have from the comfort of their home. So, there's some opportunities there beyond just what happened for COVID, and really helped to advance where we're at digitally. We did that internal chatbot I mentioned. We were able to identify a lot of opportunities for efficiency. We're able to redeploy employees from those helplines back to talking with members, which is what their focus is meant to be. We're able to make those conversations more efficient. Our employees were better and able to find the information they needed. And the great part about a chatbot is employees will ask it whatever they think it should tell them. So we're able to start understanding what are employees not able to find readily available. And when we launched the chatbot to the whole company in January, people have now wanted to be their kind of one-stop shopping for all employee information, not just knowledge base. I want to know who this person's extension is. I want to know what department they're in, all kinds of stuff. So it could eventually, be a one-stop virtual assistant for our, what's now our company intranet. So really, and then the other thing I think that was great that came out of this is people learning to work together and, a little bit less tribalism between our different areas. As we've grown as a company, we've tried to maintain kind of that culture across across the whole company, but it's been challenging when you're not, forced to work in something together. And we were all forced to give and take and figure out, how can we help and assist each other, and, knowing we wouldn't be successful as an organization if we didn't do that. So we were able to find some efficiencies there where Department A didn't know what Department B was doing. And then now they're talking to each other, they're able to find some synergies that make things more efficient.
It's interesting. Thank you. The whole chatbot side of things, everyone I know that's implemented a chatbot absolutely says it's the best thing because the internal education alone, releasing it to the external side, but the internal education side is amazing. So that's really good. And it's interesting to hear you say that you improved communication during a pandemic where we're remote. One would question that. I thought communication only worked when we're together, right? But clearly we learn different ways, which is really wonderful. Okay. To me, and I want to wrap up this section and move into non-interest income, but one of the things that I've seen just anecdotally is we have seen people cut branch hours, and what they've learned is that no one was going to the branches at these goofy hours anyways. Not every branch needs the same hours. We've also seen some people decentralize call centers, not only just to individuals' homes to work from, but instead of having a big call center, we've seen the call center employees going to branches and spreading out the people across many branches to reduce potential infection. So a lot of unique things have come out of this for potentially reducing the cost of building an addition on a building for a call center. So some different things I've seen that are really been pretty unique and cool coming out of this. All right, so I don't like talking about expense control because that's no fun. I like revenue enhancement. It's much more fun to talk about that. People smile when you say that. So the next section I want to talk a little bit about is boosting non-interest income. And, Jen, we'll start with you. What's the biggest problem facing credit unions right now, and how does FinTech help with this solution? How does FinTech help get more non-interest income? And just those that don't know, is non-interest income is income not from a loan or a deposit. It's just another source of income.
Yeah, a way that it's challenging for all credit unions, right, to find ways to earn other income. But debit and credit card interchange income is a great way to boost that income. And so I think FinTech plays a huge role in that. I think members want to have easy access to payments and cards. And if you can do that through the digital wallet or digital issuance, that would be very successful for members. So I think promoting usage through the digital platform, members want to have control. They want to be able to set their own limits. They want to be able to freeze their card if they leave it somewhere. They want advanced alert and controls. They want to be notified instantly of any fraudulent transactions. And so I think technology plays a huge role in that, because every credit union's goal is to have their card top of wallet. So I think providing those features and functionalities will definitely, help that.
Yeah, we're clearly buying stuff still, just in different means, and that mean can generate lots of fee income on interchange income, which is not a punitive income, which is one thing I really like. You're encouraging people to use you, you're their primary financial institution, which results in you getting all the debit card or credit card swipes, all that interchange income. And again, it's non-punitive, so I really, really like that. So thank you very much, Jen. Ben, how do you use FinTech to boost revenue, particularly non-interest income? You have an example or something you could share with us?
Yeah, no, absolutely. The card interchange is a huge part of it. So, we talked about that there. So I don't want to repeat what Jen just said. But yeah, that's a lot of what FinTech can help provide, is more utilization of our products. So yeah, and it is nice. It's not punitive, like you've mentioned. It's a win-win for all of us. You're probably using a card for those transactions anyway. Use a credit union card. The money stays local. Things like that. Also, we also are looking at FinTech to help. We have a local loyalty program where you get a discount if you use our card at a local merchant. So drawing attention to those opportunities. Also looking at things that boost digital engagement. And some of what I've been trying to explore this year is how do you put a dollar amount to that? So we've increased digital engagement by 10% due to all these FinTech apps that our members are able to use. What does that equal in retention of members and in utilization of other products and services. So that's something I hope to quantify at some point, and really be able to say, by increasing our members or retaining X number of members, here's how we've overall kept our revenue high or reduced expense. So we're also looking at fintech as an opportunity. So along the way, we've formed a QSO, which is an opportunity for credit unions to invest part of their money. And the economics of COVID have led to us having lots of deposits, just kind of sitting in accounts right now. Loans aren't going out the door. So we're making investments in fintech opportunities to help them grow, support the industry, do cool things like promote financial wellness, like PocketNest does, and really have the opportunity to change the industry for the better, make it more positive interaction for credit union members, and it not just be something that fintech is working with the major players and the big banks or the super regionals. They're able to work with their credit union and make it a fun, engaging experience. And by increasing that loyalty, increasing that engagement, they're getting a better overall financial experience. They're more financially well. They're able to be better members of ours because they're able to use more financial products and services. So ultimately, that all leads to more revenue. Speaking to the non-fee part, though, the interest income is probably the best way, or the investment part of that. But yeah, there's a lot of indirect ways that helps kind of boost the bottom line as well.
Well, it's interesting. Part of that answer goes up in the expense cutting that we covered a minute ago, because how I measure digital interaction is someone goes to the app versus the lobby. What's the cost for the teller? What's the cost for the building, the tax, everything? And so it becomes a great cost savings there. But I still don't think we're getting rid of all of our branches, so that is still important. Now, with the revenue driving side, Jen, maybe a little bit. Do you guys have you had success of referring people from a technology side, from coming in maybe to check a balance or something, to getting a mortgage? Is that referral process really working on your system?
Yeah, I think that we're successful in that, and we've been able, like Ben had mentioned, from a credit union service organization standpoint, even expand referral opportunities to trust services and to another QSO that we're involved in called True Treasury, which offers an extensive, robust small business product and service offering. So it's gone beyond mortgages, and I think that we're happy to be able to provide those services that credit union members weren't otherwise privy to in the past. So it continues to go well, and we continue to communicate well with our members about all of those advanced services.
Okay. Yeah, that's a great way of doing that. Now, Jessica, how is fintech? How are you seeing this help generate non-interest income? What are you seeing?
Yeah, I think, when I think of all the services that credit unions can provide, all of the, each credit union provides different services, but if you're doing a lot of it and you've got a wealth management group or a relationship with a company that does wealth management for your members, credit unions are doing, of course, mortgages, origination, and also refi. And then the toy loans, right? The RVs and the, even auto loans. And maybe college savings plans for kids. There's all these financial solutions that your credit union is providing, and they're all listed on your website. What we've seen is this big disconnect between all those services that you are providing, and by the way, providing at with the best intention of trying to bring your members each service they need right at the right time. This disconnect that we've seen is between those services and what your members coming to you for those services. And so the tool one of the reasons we've created the tool we've created at PocketNest is to bridge those opportunities together. Find your members where they are in their life, and digitally when they need a specific solution. Find those people and then connect them right to the services you're providing. So as we think of non-interest income, we think fintech is the answer, and frankly, the more holistic and complete a tool, we think that's the answer to bring more additional non-interest income over to each of the credit unions.
Yeah, that's a great explanation. Thank you, Jess. Now, Lori, I was thinking about this. You get to see all sorts of different industries, all sorts of different people. Is there a measurement? Is there a direct connection between the digital experience and revenue that you've seen in your work?
Yes, that's a great question. Because we get the opportunity to obviously touch a number of different industries, we get to share what other industries do and how they measure things across similar or like industries. But I love that question because I think, Ben, you touched on this a little bit. Traditionally, when organizations made an investment in fintech or technology or digital projects, they had a hard return on investment number that CEOs and executives were learning, which is, I'm going to invest $100,000 and I expect that to return on either revenue growth or operating efficiencies within 3 years, right? The new digital world, which Ben, you touched on, has a new metric, which is return on experience, which is more qualitative than it is quantitative, but it ties into two other metrics that are really important, which is the customer lifetime value. So if you're able to assess kind of where you could put in some new metrics to drive the value of these returns on experience, it might be in the overall lifetime value of your customer has increased by 10%. That means what Jessica was touching on is that you've hit them using technology and data with services and things that follow them along their journey. And that the more insight you have into their journey and how I would interact with, a credit union or a community bank, I have a more thrilling experience where I feel like you know exactly what I need. So that means that I do more with your particular institution or credit union. And what that means is that you'd see customer acquisitions, which is if I was actually disappointed in my experience, I'm constantly being offered services that just aren't at the right point in time in my life. I feel like there's a disconnect, and I could easily be swayed by the credit union down the road or the bank right beside me. And that has a customer acquisition cost, which means you would have to replace me with maybe 2 or 3 more customers in your pipeline. So when you think about all of those kind of metrics, those metrics are really popular in the industries that are direct to consumer for commerce, apparel, any sort of online products or services. Those are relevant here in how you say experience does have a lot of value. The better experiences that I have that add up, the more referrals I will bring in and the more time and products and services I would take advantage of. So that's just one way to kind of think about it. And I know, Charlie, you like to think about it from the, either driving revenue or operating efficiency from the side, the finance side, but that's how we're retraining either chief digital officers, chief information officers, or chief financial officers that these investments have value, and that value can be growing my lifetime value as a customer or reducing customer acquisition costs, which directly tie to marketing and advertising, and also tie into customer experience and where you decide where you're going to invest in the next set of projects along your roadmap.
Lori, I really appreciate that because I do have to step out of my comfort zone, which is just the pure numbers world. But we look at doing things today and helping people with acquisitions of businesses, branches, banks, different things for the purpose of that acquisition of the customer. The member acquisition in creating space has become so difficult and so expensive that if we can keep them by the technology, we're really saving a lot of money. And then also, if you are the go-to spot for me, I'm going to tell everyone I know. And that word-of-mouth advertising, we all know, is the best type of advertising out there. So,
Yeah.
All right. Before I move on to the next section I want to get into here, anyone have any other comments they want to add about non-interest income? All right. I see the resounding no comments. Love it. All right. So let's talk about the next generation of consumers. And we have all sorts of great debates in our office about this on a regular basis, just from buying habits to renting versus owning and all sorts of different things. But thinking about the next generation of consumers is very important to our industry, as they're the next people that are going to take loans when the loan volume hopefully comes back someday. As Ben mentioned, it's difficult right now, but also who are going to be our depositors. And they have a lot different choices today than we did, or I did, I'll say, at that age. And so it's definitely interesting. So, Lori, let me start out with you here. What's really unique about the next gen, and what is their take? How do they look at technology?
That's a great question. And I think I'll go back to the statistic I provided earlier, which is that 98% of millennials would opt to try a different non-traditional banking solution than their parents. I would love to have a full-time title of futurist, because we have a number of changes really happening. And so we have the traditional experience expectations that customers have or members have changing in our day-to-day lives. If you think about, just the example that I ran through last night, it's, I deposited one of our, paper manual checks from one of our clients by snapping it on my smartphone. And then I check my personal Mint on my monthly expenditures. I Venmo my friend money after dinner. Like, all of these transactions are what becomes more and more part of our day-to-day life. So you have the consumer trends. Then you have the post-COVID trends, right? Which is, you have people doing business and operating differently and getting more comfortable with the virtual world. But then there's also this really interesting trend that I've been kind of spending some time thinking about, which is this growth in the gig economy, or those people who are leaving traditional corporations for a number of reasons and starting small businesses. So that is a huge trend that is happening because of all the different ways that people can monetize their expertise and experiences. So you could have a huge growth in small businesses starting, which means, there's lines of credit or different kind of operating loans that they'd be seeking. So those are some of the trends that I find very fascinating. And I think it will all make the landscape pretty competitive. So that's why, it comes back to the younger generation want seamless technology experience if they are in person and online. I think, Jen, you mentioned how much you really focused on ensuring that if I walk into a credit union or community bank, I have the same experience in person that I have online, And so that's definitely something that continues to be an issue, and the competitive landscape keeps changing. So, those are the things that I've been kind of interested in this space, at least.
It's really interesting, because we used to call what's your local branch what I go into with my credit union, which I haven't been into for 18 months. But I do have my local branch right here in my hand, where I take pictures of checks, transfer money, pay bills. It's definitely changed the landscape. So thank you very much. Jess, to you, Jessica, to talk a little bit about this. How is it changing personal finance side? What are people's expectations, behaviors? And I do love the term futurist. We'll call you one now, and Lori. So
mediocre right now.
Yeah, it's amazing. So I didn't get a chance to share, but I've been in the industry for 20 years. And so I have seen, my primary clients were, I've been in the wealth management industry. I think I left that detail out, but my clients have all been baby boomers up until I started Pocket Nest a handful of years ago. Watching the way the next generation of clients were coming in and their desire to be served and the way was just, it continues to blow my mind on how different that experience was. Because of course we know it's all tech first, sure, but it's a lot of other things that, so trend number one, I would say how I've seen the next gen want, I'm going to kind of be talking about wealth management, but let's just call it financial services. Definitely tech first. You can build a relationship with your members over tech, just because you're not having face-to-face conversations. That next gen still looks at a relationship with your with your tools as part of their relationship with you. So tech first, build your relationship that way. The next gen wants to educate themselves first before meeting with a financial expert, because they don't want to appear like they don't know what they're talking about. They're a very, let me, do it yourself from an education standpoint. So before they come in to meet with you, they have done some research, which I think is really interesting and different than prior generations. The third piece that's really interesting, and I've got a stat that I think is equally mind-blowing. The next gen is expecting their financial institution to market financial products to them before they have any face-to-face or verbal conversation. So the only way that they can see your tools, and not even just products that you offer, but the product that you believe is right for them, you have to do that over technology. Now, as we've suggested, if you're marketing a tool, you're marketing a product to your next generation that isn't a fit for them, they're irritated. They wonder why you don't know them better than you do. So, that's kind of the fourth piece is, you have to offer them products and solutions before you meet them in person. You have to do that over technology, and it has to be a fit for them. If not, as Lori said, 98%, they'll fire you over technology if you don't have the right technology, which I don't think needs to feel like an alarming statistic. I'd like to think of the other side of that. You have an entire generation out there right now that is up for grabs. They're looking for a financial institution who gets them from a tech standpoint. Go after that next generation, because they're all out there waiting.
I appreciate that, Jess. And I've got two quick questions in this section, and no one's going to believe this, but I'm going over my time expectations, which is not it was completely normal for me. But just real quick, Ben, just a quick answer: how is the next gen impacted your time frame for implementation of innovation? Have you moved faster because of next gen? Are you slower? What's happening?
Yeah, no, we absolutely have to move faster. They're all trying to use fintech. We have a lot of people coming in and telling us, in the surveys and other ways we engage with our young members. We're, again, university affiliated institution. We have a lot of turnover of the younger generation come through. And they tell us they don't need an account. They have Cash App. They have whatever fintech apps, but they call us when Robinhood's not working as well. And they tell us they're going to leave and go to someone else because we aren't working there. So we had to make some changes and work with Plaid to get that resolved, because that's what's used in the back end of a lot of fintech apps. So we really are trying to support open finance to kind of understand that this generation wants all these tools in place. But I've also recently read some articles from some thought leaders in the space talking about how this generation doesn't necessarily want fintech apps. They want their banks and credit unions to offer better technology. And the way to do that is through partnerships. We can't build this stuff ourselves. We're not the experts in it. Partnering with people like Jessica and Pocket Nest allow us to provide financial wellness tools very quickly. We were able to, sign a contract and say, we'll cover the cost for this for people to try it. And now they're able to use that free of cost. They're able to get what they need. And really, that's the way forward in this, I think, is that partnership model.
Yeah, it is. It's a good model to make things and deploy quickly. Jen, I was thinking, Jess made a comment a moment ago about older generation and younger generation, which started to kind of get stuck in the back of my head. How do you balance the needs of the two generations? I mean, Charlie wants to close the branches to save money, but we still have people that use them.
Right. Yeah. I mean, I think regardless of what generation a member falls into or how digitally savvy they are, everybody just wants it to be easy. So I think if you just start there and keep it simple, and I said it earlier, if your design is simple and intuitive and you're offering the right products and services and just making it easy, then, members will use it regardless. But I think one other key thing is personalizing the experience. How many times over the years have you logged into your digital experience, and it's the same for everybody? I think credit unions are getting smarter and more innovative in that, in allowing that experience to be personalized based on needs. Like, we're not offering everybody a car loan because not everybody needs one. So it would be the same within the digital experience as well.
And I do think a number of older people I know are even better at technology than some young people. So it's interesting. You can't stereotype. It just doesn't work with how things have come out here. Well, last couple areas I want to talk on quickly is crafting the right digital strategy, and then a little bit about implementation. And So Laura, you've seen this a bunch of times over the years. Maybe give us some insight. What's the best pathway to implementing a good digital practice?
I think the best pathway is a collaborative approach. So step one is that the business strategy has to have all expertise involved from the very beginning. So by that, I mean, as the CEO and leadership team is developing the next 3 to 5 year plan, where we want to be in the future, what do we want to be leading in, what areas are we going to focus on. That includes those who have technology, automation, digital expertise. I'm still kind of surprised how many times that has been left out of the drafting of the strategy. It seems really obvious, but it's this transformation of how the CIO or the chief technology officer looked in the past to what is now needed for the digital world. So it starts with collaboration on that business strategy. Then it talks about, then where you really invest some time is understanding, and we were touching on this, understanding the value map that you have. How exactly are your customers and how are all the different types of your customers interacting with your organization? And I think Ben and Jen and Jess kind of highlighted some really interesting ways, because understanding how I interact with a community bank or credit union requires data, process, people, and technology. And understanding where you could really create projects and value based on that information is another key piece. Then where organizations are really doing, and I think, Ben, you hit on this, is assessing, do we have the capabilities to do this project in-house? Or do we need partners? And who are those partners? And are we bringing all of our partners together to make sure all the systems talk, all the experience from my perspective as a member or a customer are aligned and seamless? And then it really boils down to, let's tactically build the roadmap of all the projects that are going to happen. And let's put the resources and time to those things. And I think, Ben, you mentioned really early on that you did, I think, your video banking project in 5 weeks. And that project would have been a 10-month project.
Yep.
That's an example of how, a lot of organizations are taking that. We need to, work towards a minimum viable product. Let's get the base of what that new product looks like online, and know that we are going to have some failures. There are going to be some things that don't quite hit right from the very beginning, but there's an opportunity to iterate and make things better, or just admit this maybe didn't work. So a lot of those things are a different way of thinking for people than we've used to. And Charlie, I go back to when our CFOs always say every IT project, it takes twice as long and twice the budget. What we're trying to do is allow for, kind of proofs of concepts and mini projects and pilots to happen that might hit or might knock it out of the park. And so that mindset is something that a lot of, I say, executives, boards, CEOs are really, trying to get their arms around as part of this. Move fast, test, pilot, iterate, fix, admit something doesn't work and move on.
Yep. Yeah. That's a good point. And one of the things you said there, Laura, I've heard a few times now, was playing nicely with each other. And Jessica, you made a comment about that. Maybe quickly you can add about how do we make that work? What's the role of FinTech for playing nicely?
Is that me or Lori?
Yeah, no, you, Jessica.
Okay.
Yeah.
I'll tell you what, from my perspective as starting a FinTech, if my tool is not integrating nicely with other tools out there, we're dead. So I think the expectation for everybody on this call and our industry is that, you should expect your vendors to play nicely, both with the big guys and the small guys. If they don't, push back. And I think we're going to see everything is going to get more and more open, and tools are going to start playing more and more nicely with one another. They need to. Okay. And they should. That's the best for member experience.
And I do know we do have a hard cutoff here with people at 1:30, so I got a couple more quick questions. And then just quickly, what do you keep at the top of your list when mapping out your digital strategy? Which is one or two things you can give me?
Yeah, so trying to stay in tune with what our members are looking for, but then also maybe trying to figure out what they don't know they need. Kind of take the Apple approach, or maybe I always like to pull out a Henry Ford quote. If you ask people what they wanted, they'd ask for faster horses. So there's some level where you need to understand what they want, but sometimes you need to put some maybe new options they haven't thought of in front of them to see, what could be beneficial to them. So a lot of what we're doing is seeing how we can, leverage AI and help them, get a more personalized experience. So things that fall under personalization are really, and kind of that hyper personalization, relationship building are kind of where we're looking for. Pocket Nest very much does that for us. And one thing I had mentioned in the earlier discussion is we're still seeing members come into us in the younger generations quite frequently, but it's when they're having a life moment that they don't know how to handle. They're getting their first job, buying a car, things like that. They can figure out all this stuff on their own, but then they need us at certain times. So figuring out what is that balance and how do you give them enough of what they need in digital to come back to us and be available to them. So, we put in a branch and people may visit once every 4 years, but that time that it's available to them, that's huge. They can do the rest of it in digital. So how do we give them what they need to do that research? How do they function? Things that focus on financial wellness, I think that's still a huge part of who we are as a society right now, is getting to better state. We did some surveying of our members about financial literacy. Financial education is also a huge part of that financial wellness as well. The better you understand it, the better you are able to to function and not have so much stress about your finances.
That's a really good point, not having stress about finances and giving people better sleep, which is probably the best health thing you can do. Jen, just to go back for a second, Ben mentioned how important doing what the members need and what they may not know they need, but how do you keep the members at the forefront of this transformation?
Yeah, you have to ask for the feedback, so we listen to, we read every Google review, we ask for the feedback through Net Promoter Score and our member effort score. So yeah, it's definitely listening to what they need, but I also do agree that you have to work on anticipating what they need as well. So we are focused on the financial education piece, giving them the tools and services out there. Like I think Jessica had said, they want to read about those things first and have those at their fingertips before coming to us. So I think that's a big focus for us as well.
Okay, yeah, it's a good point, is thinking about what's best, using them, reviewing, and coming back. Well, one last quick question for everyone, then we're going to go over to Ashley again here to wrap stuff up. And this is something I struggle with. Good implementation of a technology project, good implementation of this area. What's just one, 2 words, a sentence of advice from each of you? And I'm going to start with Jen.
Yeah, vendor vetting. I think really, really going through the product's features and functionalities, because a sales presentation is nice, but it may at the end of the day not fit the needs of the credit union or not feel like the credit union, which Jessica was talking about, playing nicely. So I think that's key.
Okay, Ben, words of advice?
Yep, absolutely. Do a lot of work up front to make it easier once it actually gets out there. Get feedback along the way as well. So, even if you have it in a simple form, it's not complete, put it in front of some people. That's why we created the lab, was to get that feedback early on to make sure we're heading in the right direction before we commit too wholly to anything.
Yeah, very good point. Lori, a couple words of advice?
Oh, I think Ben hit on mine, which is understand your requirements for the project or the implementation. Clarity around requirements, research, and planning. Those upfront pieces are so critical to success. And then the last thing I would say is that define your metrics for success after the project and monitor how you're doing after the project. Mm-hmm. So metrics for success. And like I said, those can be direct, tied to hard numbers, or they could be tied to a return on an experience. But building systems to monitor what good is, once you've defined good, is critical.
Jessica, anything you'd like to add to this?
One word: communication. Just as much communication as possible when working. I mean, this is from our perspective, from the vendor perspective. The more we understand what our customers, the credit unions want, the better we can deliver to them. So we try to over communicate everywhere.
Yeah, I think listening to that is that we've gone into technology projects like this that you guys hit all the right spots, right vendor, good details, communication. That's key to it. With that, I want to hand off control back to Ashley, who's got some great parting words for us.
Oh, there we go. Well, thank you, each of you, so much for Charlie, for moderating such an awesome conversation.